Welcome to today's Market Snapshot. My name is Craig Erlam, Senior Market Analyst at OANDA. Now today we're releasing a video a little bit later on. We wanted to give ourselves time to see the ECB announcement and press conference and give us time to reflect on it and see how it impacted the markets. As it turns out, there wasn't much to reflect on the euro, currently trading around the levels it was at the start of the day, so not too much change on that front. Elsewhere in the equity markets, we are seeing European indices broadly lower. We're seeing the US slightly lower as well, although we're not seeing significant losses here. This isn't a case of we're now in this risk-off mode. Could be, or appears to be, a case of more pairing these gains, which we've seen at times throughout the equity markets. In the commodity space, we are seeing broader commodity markets higher, gold and silver a little bit higher on the day, natural gas, copper higher as well. It's been a very good, strong week for silver in particular. We've seen some solid gains here. The only place we're really seeing some downside is in Brent and WTI, but again, we'll touch on this in a second. In the currency space, we are seeing broad dollar gains now since the US opened. Earlier on, we did see some dollar weakness early on in the European session, but it seems since the start of the US Open, we are seeing the dollar strengthen at the moment, and we've seen, therefore, all the other currencies that were actually making gains against the dollar, all these gains have been broadly reversed, and actually we're seeing the dollar now trading higher by around 1/10 of 1%. Now, if we take a look at today's economic calendar, you can see here that we had the retail sales out the UK earlier on. Very disappointing, although we did see the pound trading higher off the back of these. We have seen, of course, like I say, we have seen it pare back since the dollar took over. I do think this was a largely dollar-driven move where we saw the pound rally rather than any response in the pound in relation to these disappointing figures for March. I would like to point out, though, that this looks to me like being a dip in March. I don't really think this is part of a longer-term trend. We are still seeing most months where we're seeing year-on-year growth at 3.7, around that 3.7 to 4.4% area, so that is still strong year-on-year readings. I do think this is possibly just a one-month blip in the UK retail sales figures. We've had some data out this afternoon from the US. Initial jobless claims 247,000, yet again another strong figure here. Continuing claims also very strong. Philly Fed manufacturing slightly disappointing. Here we were expecting a small drop to 8.9, but falls to minus 1.6, and also slightly disappointing for the CB leading indicator as well. But really the key event today was quite clearly that ECB meeting and the press conference after. Now, we weren't expecting any policy change from the ECB, and of course that's exactly what we got. But we did want to see hear from Mario Draghi to find out exactly, well, two things really. One, was he going to try and talk down the euro? This is an old trick of Mario Draghi's, in that he doesn't have the policy tools available, or he doesn't have the support to use policy tools available in order to weaken the euro currency. And therefore his old tactic used to be that he'd talk down the currency instead. Now, since the middle of March, when we had the G20 meeting, we have seen what has appeared to be an effort from the banks to try and stabilise the market somewhat, and these efforts have worked quite well. And I think Mario Draghi actually referred to this during the press conference, in that he mentioned August and January and the market instability that we did have, and how the tools which were unleashed, this bazooka that was unleashed last month, hasn't had the impact on the markets that other monetary stimulus may have had, but it is benefiting the Eurozone economy. But he did also leave the door open to further negative rates, which I thought was interesting. We saw the euro rally into the actual press conference itself, and we saw it rally off the back of some of Mario Draghi's comments, but he did leave the door open. There was a quite discreet comment saying, he made it very clear that all policy tools remain on the table, that rates would remain at or below present levels for an extended time, that experience with negative rates has been broadly positive. So really not necessarily saying that these negative rates are off the table, but I thought it's important to stress that he also didn't say that these were going to be the next policy tool that the ECB would look to use if they needed to. He very much stayed away from that fact, and instead was focused more on the policy transmission, and like we've seen at the previous press conference, the importance of helping the Eurozone economy recover and improving the credit channels. So looks like negative rates aren't off the table. Initially the markets didn't respond too much to this, but we have seen this broader dollar strength this afternoon. So maybe a combination of the fact that these negative rates are on the table and the fact that we've seen some dollar strength. This is what's led to some of the euro dollar actually pairing some of its gains. It rose up to 114 and it's now trading back at around 113 levels. Now, if we take a look at, I do have a couple of charts lined up for you, because the next major topic today, as it has been for most of the week, is actually oil. Now, you can see that we have seen rally again yesterday in oil, and we touched on this previously about the fact that yes, we didn't have this agreement in Doha over the weekend, and the fact that this could have been negative for oil, given the fact that we did a rally into the meeting on the hopes that we could see an oil output freeze. We also touched on the fact that we did see oil continue to rally, potentially on the back of this strike in Kuwait and the lack of the decline in oil output that could follow, and then this was resolved and oil continued to rally. And then you start to beg the question, well, what is driving oil higher? Is it the fact that we are now seeing more of a demand-driven story, whereby the Chinese data is actually leading to the idea that we could actually see demand start to increase, given the economic activity in China is increasing, and given that China is the biggest consumer of oil, and therefore that could lead to more of a demand-side rally rather than a supply-side decline. And we've also seen a weaker dollar, of course, which also can help the oil rallying, given the fact that we've seen the reversal in oil now this afternoon down 1.8%, at the same time that we've seen a reversal in the dollar, would suggest that this strong correlation remains. But I think it's also important to note, you can see here this technical level, if we just zoom in a little bit on this chart, we are trading in this very key technical zone. Now, those of you who have seen my charts before know I tend to look at bands and areas of support and resistance rather than specific levels, but you can see this area, price support and resistance here between $42 and $43. We've got this moving average here, the 240, or the band 200 to 240, and it looks like we're just running into resistance here. Now, this could just be temporary support and resistance, this could just be consolidation, or it could be a sign that we are going to see a bit more downside pressure here. It's going to be interesting to watch this one over the next couple of weeks, because I do think a break through 42, 43 could see us trading back towards these 48 to 51 levels in WTI. We've got a similar thing in Brent crude as well, trading around these $46 to $46.50 levels. Again, we've got the 200, 240 band on the moving average side. We have run into resistance here initially, but again, at break above here, we could be looking at 50.50 or even as high as 53.50 as well. So potentially some interesting levels to come in WTI. So it could be seeing some technicals driving the markets right now, but also I'd be keeping a close eye on that dollar index, because it does seem that there is a strong correlation between the two. When we see the dollar rally, it does seem to correlate with oil actually pulling off its highs. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.